Hey crew, here is the personal budgeting process that I use every year. And this process has helped me become a millionaire and also semi retired in my 30s because what it does is it grounds a solid financial awareness and steps that this can then translate into what I also use for business. So, financial budgeting and actual to budget. So, the first step I'm going to take you through here is actually creating an annual budget for your personal. And through this process, you will get clarity on your income inflows and also your living expenses and discretionary spend. I've also included in this, if you're into that real time cash allocation, like Barefoot Investor and Profit First, those guys do, I've put into the template a split in living expense, splurge, savings, and tax. And this will calculate the percentage of split of so every week when money comes into your account, you can transfer those percentages into their respective bank accounts, and that then puts money aside and gives you comfort in splurge, what you've got to spend on splurge and travel and that sort of thing. And it's like guilt-free spending, but it's real-time cash split. So the first thing that I do here is put the date. So I put 1 January 2026 to 31 December 2026. I normally do this process at the first week of Jan every year, review my actual to budget, and then copy the previous year's one and create a separate template. So create a copy, and I would put in here, this is now 2027, and then 2026 here, so that you're tracking data over time, and then you can use that to then help you build out your annual budget. So the annual budget, firstly, we want the income flows to be calculated first. So the income flows are going to be conservative estimates of what you believe you're going to earn this year in income. So the first thing that I always do is look at the past year, look at the bank account statements, and go through all my bank accounts and see what income I earn. If you've got a simple structure where it's like I'm getting 1,000 or 2,000 a week from my business, and that's the net amount that gets transferred in, then you just put that in. So let's say it's 2,000 a week hits your bank account. Any bonuses that you feel are certain, otherwise don't put them in. But if you feel you're going to say earn 20,000 a year, then you want to put that in, and you're going to put the amount in as a weekly amount. So divided by 52. If there's interest income that you've earned, let's say 10,000 in interest income on your savings, then put that in as a weekly amount. Any business dividends, depending on how you structure your business. So we have an employment engagement with the business. So I get paid wages for the time I work in my business, and then I get dividends for the other part. Dividends are not, they're pre-tax. So I need to put money aside for those. So I'll put, say, let's just say it's 2 grand a week in dividends, just for this example. My tax calculation here will calculate how much tax I need to put aside, and this percentage will calculate how much each week I want to put from the income that comes in, how much money I put aside for tax. So if I get into my bank account in a week, that's monthly, if I get into my bank account this week 4,577, 14% of that I will put aside into my tax hold account, so that by the quarterly PAYG or by the end of the year, I know that I've got my tax money put aside and I feel solid with that. So this is what that helps calculate. And so that is the percentage of this 34 estimate divided by all of the gross income that I've earned. And I put 14% aside. And so the calculation here is all of the pre-tax income. So only the section that's pre-tax multiplied by 30%, and I'm doing 30 because my dividends are franked, which means that the company's already paid some tax on it. So if you need more information on that, you can ask in the school Q&A if you're on school, or you can even ask if you're watching on YouTube in the comments. But tax, or ask your accountant. So you will want to put aside enough tax to know that you're going to not be shortfall at the end of the year. And if you're at the highest tax bracket, you might want to put, and you're not getting franking credits, you might want to put more aside, like the 51. So you just got to be mindful of what's the conservative amount that I need to put aside for tax, and this will help you calculate that. So let's say this is the numbers, it's 203, 800 of net income after I take the tax, or 238,000 gross, and then I'm going to put that 34,000 aside into a tax account. Then down here you got your living expenses. So this is only things paid by you, not by your employer or business or super fund. So I've put here most of the common living expenses that are allocatable, so that are most likely to come up for you when you're doing your budget. And this is what I use each year. However, there's also some additional lines. There's an additional line here for you to add a different expense, or you can change some of them to suit whatever your category is that you feel you need in there. So let's say rental expense here, you want to still be doing weekly amounts. So let's say it's 3,000 a month. I divide it by 4.3 because there's 4 weeks in a month, but over a full year, it doesn't quite, it's more like 4.3. So it's 698 per week. And you can see it gets to a rounding of about 3,023. But if I was to put that, if I was to put 3,000 divided by 4, then it'd be too much per month. So that's why I go with the 4.3. So 3,000 divided by 4.3 is the weekly amount. And then I make sure that is a negative. So here, let's say you got rent as well, $1,000 a week in rent. Council rates, $3,000 a year, divided by 52 to get it weekly. So you get the drift. So you're just dropping in. So if it's quarterly, so say like gas, 159 for a gas bottle every quarter. I can either divide that by 3 and then by 4.3, or I can just multiply that by 4 quarters divided by 52, which is probably the easiest and most accurate. So 159 for the quarter. So water, we have an annual fee for water license of 500, divide that by 52. Gardening and lawn mowing, I do all of that. Pool, let's say it's monthly, 79 divided by 4.3. So you can get the drift on how to do this. Cleaning, 180 per fortnight. So the key with this is to you look at your bank, especially the first time you build it, look at your bank statements in the past and get as close as possible estimate without spending years trying to prepare it. Get as close as possible to estimate what you believe your actual expenses are going to be. And that is going to really set you up well for the first year. And then in following years after that, you'll have real data collected and you'll be able to then pretty easily estimate forward. Like the first time you do it, I'd say it'll probably take you a bunch of hours, like half a day or something, to look for all the accounts and get it done. But now for me, it's a couple hour process max, like probably an hour, because I'm able to pull forward data and I know my numbers so clearly. And there are people will talk about automated systems, and like I love to get support from technology, but for me, this is so fundamental for my awareness of financials and for my own use of strategic money management that I find that doing it manually every month and adding my bank. So I actually go through every month at the first week, and I'm going to show this in the next video. But at the first week of the next month, I'll go through my bank statements and allocate all my incomes and all the expenses. It's probably an hour and a half every month to do that process, but it gives me full clarity of my numbers, and I can see where things are blowing out, or where I can save a bit more coin, or where I want to allocate more to something fun, or I can know like why, like where I can really work on building my wealth in that way because I've got full clarity of the numbers. So repairs and maintenance, mobile internet, Starlink, 129 a month, so 4.3. Yeah, just go through supermarkets, 400 a week. Butcher, 100 a week. Fruit and veg, 100 a week. Seafood, 50. Bakery, 25. Baby food nappies is already in here for me. I wouldn't worry about that, but if you want to separate it, you can. So the goal is to have these. Some of it, butcher might go into supermarket if you're buying from the supermarket's butcher, but by splitting it, you'll get more clarity over time. But it's up to you how you want to do it. If you want to bunch it all or split it. But the more you understand your number, the easier it will get to be able to manage it in the future. Then, for example, you got your car loan repayments, physios, doctors, chiros, all that sort of thing. Healing support, supplements, pets, Pilates, yoga, dance, all of that stuff goes in. We'd have an awesome Sundance every week, so we'll put $60 a week in there for 2 of us to go dance. Bank fees, accounting fees, all of that. So go through all your expenses and you'll list it out in here. And this typically, most people, around 50 to 60% of their cash flow is spent on living expenses. So if this is like way higher or way less, then it's good to see, to understand how you sit within that. And this calculation, the 58%, is that total living expenses divided by all of the income, excluding the tax, because the tax you're going to move to the side, but it's your gross income. And so we're going to move 14% of the income, which is 34,000, aside into the tax account. And also, this will give me, of that cash inflows, if I put aside 58%, that will cover, or theoretically should cover, unless I have blowouts or I don't get paid for some reason, that will cover the living expenses. So this process is to help you calculate your splits. And what I find with those is it can be really handy and awesome to have put aside, say, splurge and savings and tax, because I'm fully comfortable and solid that I know I've got the money there. Sometimes my investment structure makes it more beneficial to not have the splits. And in those times, I still do this process. I still track and measure actual to budget. But the splits are really handy. You've got a splurge account, like it's guilt free because you've put the money aside. You go travel, go out for dinner or whatever, and you've got the money there in a bank account. And it really forces you to manage it real time. So I really love that process. But I still always do this process, which is actual to budget, and review every month how I'm going, because it's one thing to put the money aside and have the split set up, but it's another thing to actually know how you went and to monitor the actual results, and whether I spent way more on bars and restaurants, but I actually wanted to do some travel. And so I feel like something that's missing from that process is the actual to budget review. So that's something that I think is just critical and needs to be done no matter what. So let's say here, discretionary now, I want to do a Euro trip. So it's going to be 25,000 for the whole year, by that by 52 weeks. Then we've got, I want to do a relationship retreat with my partner, say 10,000, bars and restaurants, 300 a month, and lunches out, loving the long lunches, let's say a few of those per month. Coffee and tea, $50 a week. And then you can add any extra ones here or change any of these that you feel aren't relevant. And so here, aiming not for more than generally 25% of cash flow. So this one's showing at 19% there. Then you got total outgoing, so 77. So that is the 46 plus the living expenses. So this is showing a potential saving of 19,904, which is 8% of cash flow. So normally, like a really good solid savings amount that's building long-term wealth, like a really solid amount, 25% surplus. Typically Aussies who are saving are around 4 to 10%. My goal, even when I'm having like a really plush year of travel, would be 10%. So I would then start to look back here and go, okay, where in this, like I just pressure test it. Is this a comfortable year? Is this a year that I'm going to enjoy? I would go, is this something realistic that I'm going to spend $70 a week on bars and restaurants? Like maybe lunches out rather than $100 a week. Maybe I can do it fortnightly and I'll do $100 a fortnight, let's say. So then let's say coffee and tea. Can I just enjoy that? I'll do it at home for this year, and it's rather than it's $50 a week, it's actually $10 a week. So just checking that. So now I'm at 10%, I feel comfortable with that. I'm going to have an epic trip. I've got a retreat, so I've got personal development and growth there, and I've got living expenses with an investment property that's also going to help build wealth, and I've got my income. So then I'm also thinking, are there ways that I can build my income, ways to invest my money and be strategic? But when I'm building it, I want it to be conservative, and it's not my goals, it's reality. So this is what I know I can achieve. So I'm comfortable. I feel like this is a good 10% savings. I'm solid. I've got a couple of epic trips and I'm learning and growing. And I'm thinking, okay, if I can beat this, then that's really good. And so I will then set some goals to start. What is it that I can do to increase my value so my employer or my business will earn more money? How can I set a goal to grow my business 10%? Can I earn another $500 a week from that if I grew it by that? So that's when you start to use this. You ground it in reality and what you know you can achieve and what's going to be a good year, whilst being aware that, okay, if I earn 24,000 of savings, that could go towards another investment property, or into growing my business or whatever it might be. But that then is you're building your wealth. And in the third section of this process, I'll take you through the balance sheet process as well. And so I feel comfortable on that 10%. If I didn't feel comfortable and it was in losses, I'd need to look at why is it in losses. So I had an example where for a couple of years I was like, oh, I got really good cash flow, and I just dropped off the bandwagon and stopped doing this process. And then I bought another property and a business, and I started to just go into negative on my personal because I was funding these things. And I realized pretty quickly it didn't feel good. I moved into survival. So then I jumped back into this, ran my spreadsheet mid-year, and then within 3 months, I refinanced to reduce my monthly mortgage repayments. I changed my home and rented the home I was in out. So I generated income, costs down, and then rented a more affordable home. So it was still nice, but it wasn't as lush as I was in. And then by doing that process, then I called in a loan so that I had put out there to support something. So I then called in that loan. So I got cash flow coming in. Within 3 months, got out of survival. And then I was able to start to really plan, okay, how do I get back to the lifestyle that I had? But I just had to take a moment to just reset, get myself, because I can't make clear decisions if I'm in survival. So it was so important to just get out of that state, start to get my savings up. So rather than my savings dropping, they were positive, and then start to then operate from a more inspired place rather than survival. So avoiding the numbers is the worst, because if you avoid it, it's like constantly a nervous system spiral, erratic ups and downs. My experience has been that just getting clarity, looking at what I'm actually doing, and then having this grounded in reality of this is what I'm doing every month, and creating a rhythm around understanding it and doing it manually and writing it in there so I know what I'm getting in income, what I'm spending, just creates such powerful clarity that allows for momentum going forward and to be strategic on how to improve my personal wealth position. And it doesn't matter whether you got $1,000, 10,000, 100, a million. The process is still the same to manage and grow wealth. You need more income than expenses to be in a calm, inspired state to make decisions that will continue to grow and expand your wealth. So this system for me is a really great system, managing the plumbing, closing the leaks, and allowing for wealth expansion. So if you're watching on YouTube, feel free to ask questions and let us know. If you have any questions, I can respond on there. If you're in school, bring any questions to the weekly Q&A, or even just share it on the group chat, and I can support you with a little video response or something. And so no question is too dumb. I'm there to support you, and excited to see and receive your feedback of the wins of how this helps you get clarity, grow your wealth, come from more inspiration. All right? You!